Good afternoon, everyone. It's Chris from Society R as well as Axel. You can find us on X, Instagram, Discord, as well as YouTube. The YouTube video is for free on weekly basis for the overall market. We use this adaptive algorithm for side market, up market, as well as down market. Remember to smash the like button, give us your commentary, and we're here to help. Let's go to the first slide up here that I have, and I put last week on February 22nd, 2025 the Friday's close, which we sold off, and there I said, is there a more major downside trend in the overall market? And to take a look at the sectors. So in the coming week, we had a sell-off, and but on Friday, what did they do? They rallied the market up from the lows back to the upside to close about 95 points. If I take this whole bar, it's about 115 points, but I looked at the open and the close of it, we got 95 points, some change points. Was this a short squeeze, coming back up because we had these 4 days down move? And finally, after the White House announcement between what was going on, we came back up sharply. Was this a short squeeze or a cat bounce? The most important thing is to understand we tested below the 116 SMA. We are still below the 50 simple moving average in the 18 and F3, which is the 38.2 fib. This was the low in the prior week, high and low, the last week or so. But if you take this channel up here, we are in an uptrend channel. We had a 8 days down bars, which ended up to be minus 5.04. And I had mentioned in the prior week, the 5800 would be minus 5.65. And if we get to 5600, that would be an 8.92% downside. In the 250 SMA is catching up. You can see it's above now the 600, and the 200 SMA is catching up a little bit higher than, down here where it was a week ago at 5720. So the most important thing is this sell-off right here with the Friday rally back up, short squeeze. Is it going to give us a short squeeze dead cat bounce, or is there more continuation to it, or we reverse back down? Because in the prior December to the January low of 2024 to the January low of 2025, which was on the 4th, we had a down move of 5.36. Now we had a move of 5.04. Is there going to be continuation, or is this a reversal back up? We're going to pay attention to what the technicals offer us, not what we think. Let's go to the next slide. Remember, check us out, get us your commentary, let us know how we can help you, and we're here to assist you. Let's go to the first slide that I have up here. I have put then in the NASDAQ 100, the Mega 8. I don't call them the Mega 7 or the Fantastic 7 because I do include Netflix in them. So I do have Apple, Amazon, Alphabet, Google, and Google, Facebook, Microsoft, Netflix, and Nvidia and Tesla. Nvidia and Tesla did about 3.9%, Nvidia did about 3.97% reversal. But if I combine all these, we had a nice small reversal back up. Is there going to be continuation in the Mega 8? We have to pay attention to the overall technical. We retested this consolidation. You can see in this area here. We'll just zoom in from this area. So I want to talk about this area where we broke out. We tested it once, we tested it twice, 3 times. Eventually on the 4th, we came back and bounced off, consolidated here. We rallied up, came back to retest this area, bounced back up, consolidated for 3 weeks, and we fell off in the last week or so. The NASDAQ 100, which is part of the XLK, the tech sector, we have been a little bit more weaker than usual. So the semiconductor is SMH. So I want to make sure that 116 SMA holds. If we end up losing this area, there's nothing to come back until we get to this support, and the 200 SMA will catch up with us. This is on the Mega 8 or the Fantastic 7, not including Netflix, but I wanted to show this there. And I want to show Tesla here, where, due to politics and everything, Tesla has been selling off very hard. And you can see there was a major reversal at the 275 and the 200 SMA on the daily. You can see here, we filled a partial gap here. So if I activate this one, if I go activate, we can reverse it this way, grab the top of this and rally it up here. And that would give us, oops, that would be down here. We want to do it down here. that would be about there. And you can see we filled a partial gap, not 100% of this gap. So this is very important on this reversal and the 200 SMA in Tesla. Let's take a look at the NVDA, and I want to show NVDA. I did not change the chart. Remember, I usually do different charting for each color, but here you can see that this consolidation, we've been getting lower highs and lower lows here. But when we bounced, we looked at the 250 SMA in this area in consolidation and reverse back. But this is a really large engulfing candle after the earning report. They came out on Thursday. We did the measured move. The 400% was around 218. At 118, I said 218. At 118, it found support and reversed back from it. It still got the 200 SMA to deal with, and F3, which is a 38.2. Let's go right now and take a look at the overall market, Nasdaq 100 and the NDX. And what I wanted to show that in the NDX, we did not fill 100% of this gap. You can see the slow here and this low here, and I measured it just to make sure we have it. We did not fill 100% of this gap, but we still have this gap to fill in the 200 SMA. Is this going to continue and clear the 116 SMA to go back to F3? If we take the highs and lows, that big drop that we had, I want you to see how I can measure it. I grabbed the point from the highs to the slow just to show you we had an 8.17%, and the close of it was 6% reversal. So we had a gain of almost 2% in the NASDAQ 100. Let's go right now to the SPX, which we mentioned. And I want to show you how to do this. I have it marked up here. We still have from the July, these highs that we had and this major November lows. We came in January. That was the sell-off, the rally, come back in. This looks like a crab or three tops up here. Very important. If this, support channel that's coming from way back, you can see it. It's coming from 10/26/2023. And it's connecting to this area here. It's still intact. We tested it and bounced off. Is there going to be continuation back to the downside? We have to pay attention to F3 and the 50 SMA on the S&P 500. Let's take a look at the semiconductor SMH. And the reason why I want to show the semiconductor SMH, we can see that it's been range bound in the last 3 months since, the September of 2024. We tried to look up, but we couldn't. We fell back in. Is there going to be support here, or are we going to end up losing this and filling a partial gap down to this area? So that's on SMH. XLK is in the tech sector, and I wanted to show this again. We bounced off the Fibonacci level, the 61.8 from last year's annual high to the January low. We came to the 61 or the 38.2, the 250 SMA, and we came back just slightly underneath the 200 SMA right here on the charts on XLK. Let's go look at JNK, which is part of the bond sector, and I wanted to, this is the Bloomberg high yield bond. We can see that the yield and the bonds are starting to nickel back up. Pay attention to the bonds in the overall market. I did not use or I or the ZB or the ZN. I just wanted to show you an electronically traded fund. We can take a look at now at the value in the S&P 500, or we can look at the mid cap MID and the small cap. What I wanted to show you is in the mid cap, we tested the 250, the 200 SMA, but missed the 250. We came back to that 59. We got a slight, push above the 200 SMA. In that consolidation, we have to pay attention to this high here, this high, and we don't end up losing the $58 range because it'll open the door further low. And this is a gap down here that I have on the charts on mid cap. Let's take a look at the small, either the value, or you can look at the small cap growth. You can use the IWF or the IWD. I usually use IWM or IWN. I'm going to show you the gross Russell 1000. You can see there was consolidation since December. We tried 3 times to look up. We failed. We didn't get to the 250 the 200 SMA or the 250. We bounced above the $382 in this consolidation, reversed back, but we stayed underneath the 116 SMA. This is the things that you have to be cautioned about. Is there going to be a change in trend, or is this just a relief before continuation lower? Let's take a look at the home builders. You remember I had mentioned home builders in the last 3 weeks. The home builders from here, it didn't get a chance to break up. It fell back down. On Friday, it kind of trying to find support down here. If there is an opportunity in the home builders, we haven't broken yet. If things are going to change and we get a reversal, I'm looking for F5 and F3 and the 50 simple moving average to catch up on that chart in ITB. Let's go back now, take a look at the micro ES. I did not move the micro ES last week's measured move. And what I wanted to do is show you on last week's range from the high to the low. Last week's range, we did 200%. We did actually 120% and reverse back on the charts on the E-mini micro S&P 500. So what can we do to measure this distance? I don't grab the high and low here. What I'm going to do is activate it. You can grab the highs of this week, which is up here, and the lows of this week. And this is your measured move on the extensions to the upside 150% or extension minus 50% to the downside, and vice versa. If we end up coming back to the 200, 250 between the minus 80 and minus 100 extension, or 180 to 200. Remember, we're going to trade what we see, not what we think. And you can extend all this because this was a consolidation when we looked up 3 times, then we failed. If there is not going to be continuation, we cannot hold the 116 SMA and get to the 50 simple moving average in F3, and we get a reversal back down. Pay attention to the 200 SMA before the 250 down here. So that's in the micro S&P 500, and I will do the and we can see in the micro NQ, I did the same thing the prior week. So what I can do is activate it, grab this Friday's high. This was the candle, and this was Friday's low, Monday through Friday. You can see the measured move. And we can do the same thing on this chart. We can see where the support and resistance are in relationship to the highs and lows and extensions to the upside, and vice versa, the extensions to the downside. The Nasdaq is a little bit more weaker. The 250 is just sitting right above the 50. In case we do fall sharply, pay attention to the backside down here. And what I want to do is zoom it down to show you that this consolidation will meet with this area before the rally. That large consolidation, the look up, retest it, bounce up. 3 tops couldn't make and eventually fell down. So this is very important in the Nasdaq, and you can see that channel was broken in the Nasdaq 100. But what we did when we came back up, we retested that area and stalled right at the high of it and couldn't go through. So let's see what next week offers us. Let's go one more time and I will show you the SPY, how to look at it. Remember, in the SPY, I had left a couple of gaps here. We have this gap here. We had this gap here, which was retested and filled. We had this gap here. We filled it, no longer valid. Very important thing in the S&P 500, pay attention to this consolidation down here. If the door opens or we end up losing the 200 SMA in these two levels, is that 250 going to hold, or are we going to come back to that consolidation down here in the S&P 500? I am not biased to either side. We're going to trade what we see, because on Friday we got an opportunity to buy back, get a small rally back up from the 5850 area in the S&P or the E-mini, reversing back, and vice versa in the SPY. Remember, we trade what we see, not what we think. And I hope this video was very helpful. If you have questions, please check us out at Solstice or at Axel. Get in contact here with us. We're here to help. Take care. Over and